Welcome to another amazing episode of Raising Private Money. I'm your host, Jay Connor, the Private Money Authority, and this is the podcast where we talk about raising private money without having to ask for money. Well, I have an amazing guest joining me here on the show today. He actually is a former hospital executive who actually retired from that, went into full time real estate investing. Can you imagine? Well, while he was in the hospital career, he actually held various executive positions, had all kinds of responsibilities. And I mean, he was in charge of total financial, all the operational control. And listen to this, in that experience, he actually oversaw budgets exceeding $100 million in annual revenue. And then he oversaw all the expenses and capital expenditure projects exceeding $30 million. Well, he took that experience being a hospital executive and he now uses that experience to run a very, very super successful land acquisition and development company that, listen to this, in just a 2-year period, he's completed nearly 100 land transactions in multiple markets all across the United States. And in this interview, I've got a guess. He doesn't use any of his own money to do it, probably as well. We'll find out. But during this period, he's been able to implement very, very successful systems that actually automates his business. And it has allowed his company to actually generate over $1 million in revenue in the past year. Now, he's got an amazing podcast as well that's called The Big Picture Blueprint. So in just a moment, you're going to meet my special guest, Mr. Mason McDonald, right after this.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Connor.
Welcome to the show, Mason.
Jay, it's great to be here.
It's great to hear your voice, Mason. That's what I'm talking about, right?
There we go. Inflate my ego. And as I joked before the show, my mom always said I had the face for radio. So here it is.
I'm sure the audience caught that right there. For goodness sakes, Mason, how in the world do you go from being a hospital executive, which, by the way, I know the majority of our audience are listening to this podcast. They don't get to see you. I mean, you look way too young to even be a hospital executive if you still were one. But how does that look? I mean, how does that happen? How do you go from hospital executive making, I'm sure, buku's money as a hospital executive, transitioning at your young age all the way over to a full-time real estate investor? How does that happen and why?
Yeah, you're right. It's terrifying that I was allowed to manage an entire healthcare facility. Became COO when I was 24 or 25 and CEO when I was 25 or 26. And from the outside view, you could see, oh, I've made it to the top of corporate America. I did it really quickly. I had the right undergrad degree. I had the right graduate school degree, but I was exhausted and did not enjoy my career and life. I was 26, 27 years old, hypertensive stage 2, sleeping 3 hours a night, stressed out all the time, didn't get to spend time with my wife. And I always wanted to invest in real estate, where my dad owned a commercial real estate portfolio that he inherited when he was really young. So I never really saw him work. My great grandfather on my mom's side developed communities in Boca Raton, Florida back in the 40s and 50s. And so it was kind of in my blood. I was listening to podcasts, always ready to invest, but just consumed education for years and years. I mean, 10,000 hours of education, easily over a decade. And I stumbled across the niche of land investing when I had saved up about 60 grand to invest. And I was going to invest in a townhome syndication. And the person that was managing the syndication said, hey, this is what I do. I do land flipping. And he had a course and I paid 5 grand, took the course. And to shorten the story, I followed the system, thought it was dumb. I was like, there's no way this is going to work. And my first deal that I did, I bought 3 parcels in Southern Colorado for $43,000 and I sold them for 185,000 and was able
Nice.
to,
I like that ROI.
oh yeah, yeah. And so I was able to quit my job primarily because my wife was the stable software engineer that managed the finances of the household. So I was able to go off and be the entrepreneur. But yeah, that's kind of the short elevator pitch of how I became a CEO and then how I transitioned into real estate investing and land flipping full time.
We're going to dig into raising private money here in just a minute. But before we do, um, we got a lot of listeners here on the show that are in corporate America. They want to be a real estate investor. They want to get into real estate, but they got this fear of losing the reliable, at least in their perspective, reliable, constant income. I get a paycheck every week. How does somebody transfer the mindset and make that jump?
I think like as a caveat to that, I could not have done it without my wife being able to make six figures in her job and support the house. So for the people that aren't not married or not very financially stable, this is not for you. It takes money to be a successful investor, especially if you're doing it full time. But the mindset shift for me, where I came from, one of the most regulated industries, healthcare in the United States is extraordinarily regulated. There's yellow and red tape everywhere. You have to operate within very strict parameters. And so I was really excited to be able to be in this entrepreneurial space where I felt like I could have unlimited freedom in how I operated. And I was humbled very quickly whenever I went from having 20 some odd direct reports and a few hundred employees under me to it was just me. And so whenever the first couple weeks, whenever something needed to be done in my new land flipping business that I had just started from the ground up, I'd look around and be like, man, someone needs to do that. And there was no one there to do it but myself. And I was also humbled in the fact that it was a lot easier for me and my personality to come into an organization that's been operating for a while, see where the deficits are and implement the plans to effectively improve them as versus building something from the ground up, which I thought was really surprising to me. I didn't realize it was easier for me to fix something than it was for me to create something. So I think those were two mindset shifts that I had to kind of figure out. And as the business became more successful, as I got more access to capital through private investors and was able to effectively hire and delegate and implement new systems, it transitioned, but it definitely took a lot longer than I would have expected it to. And I really just want to drive home the point of don't do what I did and quit your job after your first deal unless you're in a really, really good position. But it's very different moving from corporate America to this space.
Right, right. Well, that's certainly understandable. Mason, there is all kinds of types of real estate that people can invest in. I mean, there's single family, there's multifamily, there's apartments, there's self storage, there's commercial, there's, on and on and on. And then there's land. Now, I know you just mentioned that someone that's what they were doing. But I'm sure you researched, I'm not sure. I would think you researched other possibilities, other avenues. So why land as
Yeah.
opposed to all these other options?
Oh yeah. And I'd thought about every single one, and having the entrepreneurial spirit typically means you have the shiny object syndrome as well. And I think for me, what I really liked about land was the lower barrier of entry to actually acquire the asset. And then two, I'm essentially on a lot of these deals, I'm just flipping it, buying it for cheap, selling it for more. I'm essentially a pawn shop for land. And with that, you're not exposed to capital gains taxes. You're taxed, it's inventory. It's like you're a wholesaler or a dealer. So the tax advantage or lack of disadvantage compared to single family homes or flipping some other asset class where there's a physical asset was appealing to me. And then beyond that, it was the multiple exit strategies in coming up with business plans in general. You always have to look at the exit. And with land, if you're purchasing it at what you assume is a discount, you can either turn around and sell it cash or conventional. You can sell it seller financing. You can potentially do a subdivide or assemblage of lots if it's a bigger parcel or a bunch of smaller parcels. You can put in some level of horizontal improvement or just clear it, or you can go vertical and build on it. So having all these different exit strategies for every piece of land was really, really appealing to me. the worst case scenario, and typically a lot of the land, you're not paying that much in property taxes. It made it a really, really attractive, active business to create, as versus a passive business where I'm losing out on the tax benefits of owning real estate, where it's, I've got a commercial building that we're converting into housing, taking 2-story building, and I don't know, it'll be 14 units or so, where I'm going to be able to write off a ton in depreciation whenever we're finished with that, and then just long-term appreciation of other rentals and stuff. So active business, I thought land was just one of the best strategies.
Now let's go back a moment. Something you said a second ago. You said there were some tax advantages to doing land. What are those advantages?
Well, I guess it's the lack of a disadvantage, I should say. So where if you, I'm not a CPA or attorney, so don't listen to me, but this is how we've done it. We're considered a dealer because we're buying and selling so much land. And since we're keeping it as inventory on the purchase, it's categorized on the profit and loss statement as cost of goods sold. And whenever we sell it, we have all these operating expenses associated with it. And we're just turning and burning inventory, just like any other wholesale operation, like a pawn shop. So not getting exposed to that capital gains taxes and having the land sales just being taxed as ordinary income that, goes through my entities and S corp and pass through taxation, all this stuff that I don't understand, I hire a CPA for, makes it so where, compared to, say, if I made 50 grand on a single family home flip, I'm typically going to have to pay some form of short-term or long-term capital gains taxes, depending on how long it takes. And I don't get exposed to that here.
Okay, I understand. Well, let's get into raising private money. Since this is a podcast that's called Raising Private Money, raising private money is actually, you've identified as one of your expertise, something that you're really, really good at. So let's start our conversation on private money like this. I've observed, after interviewing hundreds and hundreds of investors that have raised private money, there's a common thread. Maybe it applies to you, maybe it doesn't apply to you. But one common thread that I have observed after interviewing so many people is that they were in their business, they were going along in their business for whatever length of time, and then something, quote unquote, something happened. Or should I say, something didn't happen. And they were actually, quote unquote, forced into finding a better and quicker way to fund their real estate deals. And therefore, they learned about private money and they started raising private money. That's exactly what happened to me. I was investing in, and still am, single family houses here in Eastern North Carolina. From 2003 to 2009, the first 6 years, I used a local bank to fund my real estate deals. Quite frankly, that's all I knew to do. I didn't know anything about private money, hard money, creative financing, subject to the existing note, on and on and on, wraparounds, whatever. I didn't know any of that stuff. All I knew was go to the local bank, get on your hands and knees, put your hands underneath your chin and beg and raise your skirt up for the bank to see your personal financial statement and all this and that. And January 2009, I was cut off from the banks, lost my line of credit, everything, because of the global financial crisis. And I had a great relationship with my banker, but then it's gone. So actually, that was the biggest blessing in disguise of anything that's happened in my business, was actually having to find a better and quicker way to fund my deals, hence private money. I've got 47 private lenders today, $8.5 million that we go from project to project to project to project on. What happened with you, if anything, that caused you? How did you start? Why, and how did you start raising private money?
Yeah, I think similar to you and so many other people, of what ended up happening to me is I made all that money on my first deal, which was great. Gave me a bunch of cash and I felt really great and really liquid. And then I went and bought a bunch of deals with all that money, and then I was out of cash again. And so I had to wait for properties to turn around, and I couldn't have any capital allocated to operating expense. And then I would get a ton of cash in whenever I would sell these properties, and then I would go buy a bunch more, and I kept trading up and up. And I was realizing that access to capital was my barrier to scale. And the challenge with going to banks for the type of business model that I have with land flipping is banks don't want to lend on that. land is not an attractive asset class to banks to lend on for this particular purpose, because you're in the standard flip where you're not really adding value. How banks who don't really understand land are incapable of calculating that LTV or loan to value. Even if you're saying, look at all this data, this land is at 40% of what the market price is, and you could lend on it at 100%. And I mean, it's secured against the asset, but they don't care. And so I had to go out to the three F's, the friends, families, and fools, and show them what I was doing and show them my business models.
Did you say friends, family, and fools?
Oh yeah, the three F's in private money is what we've come to call them. But
I thought I had heard it all in private money, and you just gave me a new one. But go ahead.
there we go. So was able to approach family members and friends and say, look, this is what I'm doing. And for certain people that really knew me well, they were willing to give me unsecured promissory notes that I'm able to keep in the business and just pay them interest on it. And they're happy. It helps them get passive income at 10+% annualized. And they love getting those monthly checks. And it started out as 1 year notes sometimes. And then they're like, can we just keep this going forever, basically? And that's great for me. And then for joint venture partnerships on deals, I was giving up anywhere from 30 to 60% of deals, of saying, for the people that didn't know me as well and didn't know my track record as well, where they would fund a deal and I'd give them a percentage of the profit. So I've changed my model a little bit, and I'm better at raising money and doing it more affordably to myself, and still making it great for my investors that are involved. But yeah, to answer your question, it was, I ran out of money and I needed a way to get it, and the bank wouldn't give it to me. But people who knew me and knew that I was good at business, and I think my corporate career and my success in corporate America made them trust me a little bit more too. So yeah, that's kind of how it got started. And I think to date, I've raised through my own companies about 1.6 or 1.7 million so far that we've deployed, and not returned all back yet. They're still live in deals, but in 2.5 years now.
Right. What's your favorite way to get the word out that you've got a way for people to get some really, really nice returns on their investing with you? How do you get the word out? How do you spread the word? What's your favorite way or methods to raise private money?
I think my favorite way is, I mean, through conversations like this, Jay, where we're just having podcasts, and I've got my own podcast that my business partner, Dan Haberkost, and I talk about various deals we're doing, and then just sharing what I'm doing in the business. And whenever you share what you're doing on social media, or LinkedIn is the main platform that I use, people come to me and say, how can I get involved? As versus me going out begging for money, people want to get involved, and they want to, get in on your success. And especially whenever they're recognizing that, this is kind of a shift in mindset that I've had to have at the beginning of this. I felt like people that were giving me money, whether it was through promissory notes or joint venture agreements, I felt like they were doing me a huge favor. And then I look at, my market portfolio and watch what I'm making every year just in the stock market and index funds and other funds and stuff like that. And I'm like, I'm doing everyone a favor. I'm giving everyone huge freaking returns. Of like, I've joked with some of my investors on really quick deals of, hey, you made 64% cash on cash on this deal in 15 days, which amounts to like 150,000% annualized return. So I think just chatting about what I'm doing and explaining that there are opportunities to invest with me now and invest with me in the future. It makes it fun whenever you see how much people want to get involved.
Right. Well, and you just said something important. It sounds like you and I do it exactly like there's no begging, there's no chasing, there's no selling, there's no persuading. We're actually offering something for that people, first of all, most of them haven't even heard of. And that's what a private lender is. And secondly, quite frankly, there's more money than there is deals out there, at least in my world. I got a problem right now. I got over $1.5 million sitting on the shelf that I'm not using in deals because I got more money than I can use. But you know what? I'd rather have that problem than having deals and no money.
Absolutely.
So it really does. This world of private money really, really does put you in the driver's seat. So let's dig into your land flipping expertise. So we know why. You told us why you focus on land. So let's get into the nuts and bolts a little bit. By the way, I believe that you also consult and coach real estate investors that want to get into land flipping and learn how to do it, right?
Yeah, I do a little bit of coaching and consulting on the side. That's not something that I do too much of, and it's mostly because I'm too busy in my business to do it. But for the right people, I do have various offerings that I can come in and consult or help coach and get people's business off the ground. I do that mostly because I've got a small team now, but I miss the hustle and bustle of being in a large organization, and I love coaching and seeing people succeed. And then beyond that, I own a company where I now joint venture with land investors or land flippers, where we come in, bring in all the capital, and we partner with you guys. And myself and my business partner have done, I guess, between us, probably 400 or 500 land deals in the past couple of years. And being able to coach and teach people how to do it, and then have them come back and have you to have us fund the deals, it just creates another integrated model within the business. So that's kind of a fun side hustle that I do, not too often though, on the coaching
Right,
consulting side.
right. Well, that's interesting. Just in case anyone that's listening has to jump, I don't want them to miss out on how they can connect with you. So tell Mason, our audience, how can they connect with you? And then we'll pick up with my next question on details of land flipping.
Yeah. Mason R. McDonald is a personal website. It should have, I think, even my personal cell phone, email, and LinkedIn link on there. So if you find, masonrmcdonald.com, you can find my links there. But in terms of what I'll respond to most quickly in terms of social media, my LinkedIn, that's where I'm most active. And there's the link right there. Reach out to me on LinkedIn. So you heard me on Jay's show and want to chat about anything from healthcare to land to private money to whiskey or watches, or just have a conversation, whatever it might be. I'm open to it.
All right. So Mason's LinkedIn connection is linkedin.com/in/Mason-McDonald. His website again is www.mason, M-A-S-O-N, the initial R, and then McDonald, McDonald.com, MasonRMcDonald.com. So on the land flipping, Mason, where do you get your list, and what are the best lists, and how do you contact them?
Yeah. So my entire business, if you listen to the next 60 seconds, we target markets in the United States where there is growth and actual transaction volume. We start at the highest level of where are people moving, find that data on the census website. And then we go to third-party MLS sites like Zillow or Redfin and look at where there's markets where over the last 90 days to 6 months, there's equal to or greater than sales than properties coming on the market. And then from that, we use PropStream and we pull landowner lists, typically targeting people that have owned the property for anywhere from 5 or more, 10 or more years, individuals in trusts, live out of state, out of county. And then we upload them into our CRM, which is called Pebble. And from Pebble, we send direct mail campaigns. And for those listening on YouTube, I've got an example of what one of those looks like. We send postcards, something like this, where it's, are you planning on building on your land? If not, we'll buy it so you can put your money to work elsewhere. And in addition to that, we use a company called Lead Mining Pros, where they skip trace the data that we send them, and they do cold calling and texting for us. And we get leads, and from there we negotiate and close deals at whatever our desired rate of return is based on that property. But that's my business.
Well, you did it in 60 seconds. That's amazing. You did it in 60 seconds, but now what's the level of understanding and implementation is a whole other world for sure. Right. So do you direct mail them that postcard more than once, or just one postcard?
It depends on the level of production within the market. There's certain markets that we'll test out, and if we don't really like what we're seeing, or we don't get too great of a response rate, we might not remail them, or we'll wait 6 to 12 months before remailing. And then in the markets that are producing, we try to hit them several times in several different touches, because you never know which marketing medium is going to appeal to people. Where today we've got an offer we sent out in Northern Colorado. We mailed them maybe a month and a half ago, but they responded to our, I think it was either cold calling or texting campaign. So we touched them at least twice, and we're offering 245. It's worth probably 500 or 600 on that one piece of land. And then we've had other ones where we've mailed them 15 or 20 times, and they finally get to the point where they say, stop mailing us unless you're serious. And we'll say, we are serious, and we'll get deals that way. So it really depends. The cost for marketing is so low in general, for what the margins of these deals are, that we don't mind a certain amount of duplication of effort. But in general, in marketing, the more times you can touch your potential seller, the more likely you are to get the deal.
Yeah, I had a very, very brilliant mentor one time tell me, Jay, if you're going to do direct mail, if you're going to mail them one time, don't waste your money.
Oh yeah.
What's a good rate of return? Not rate of return, response rate. What's a good response rate? You mail out, 1,000 postcards. What's a good response?
God, a good response is probably 1%, I would say.
Okay.
And it really depends. We try to keep it open-ended with our marketing. That's why we're doing neutral letters or neutral postcards rather than blind offers, which I know a lot of people in the land space do blind offers, which essentially means you're saying, I want to buy your land at 123 Main Street. I'll pay $8,500 for it. We'll close in 30 days. I feel like we get a greater response rate, but potentially an equal close rate using the neutral letters, because with a neutral letter, you're able to go in, and especially if you have decently professional marketing and it doesn't come across as super scammy, like cash, we buy land cash now, fast, the pawn shop type marketing. Say a piece of land is worth 100 grand and you sent them a blind offer, and your math was wrong whenever you calculated your initial offer, and you offered them 29,000. Say they would have accepted 49,000, but they see 29,000, they get emotional, they rip it up and they throw it away, as versus something along the lines of, we're interested in purchasing your land. And then you are able to have that more open-ended conversation with them and just get them on the phone, because getting them on the phone is the most important thing, because then you can use your soft skills to attempt to close deals.
Well, it's been my experience in real estate investing with single family houses. The more time that goes by between them responding and you getting them actually on the phone for a conversation, the less likely you're ever going to do a deal, because time kills deal. You agree?
Oh, absolutely. And land is less competitive in general, I feel like, than single family houses. However, I mean, I own a bunch of land. I've got probably, I don't know, 40 listings live right now, give or take, maybe a little less. And I get purchase agreements and postcards in the mail all the time for my land. And every so often, I'll actually call these people, and I've never actually had anyone answer the phone live, and I've never had anyone call me back before, even whenever they send me an offer that I'm potentially open to accepting. So when I see that, I view that, okay, that's my competition. Then I'm really not worried about my competition in this space if people can't even answer the phones or call people back. So the quicker we can get back, the better. However, it's that it factor, or the really good salesperson that's going to absolutely get the deals over the finish line. But if you say, hey, Nancy, I'm going to call you back on Tuesday the 30th at 3 p.m. To discuss what we've discovered during our due diligence period, and you never call them back, why are they going to trust you? They're already scared of scams. So I think appropriate follow-up, and just doing what you're going to say you're going to do is one of the most important things of getting those deals over the finish line.
100%, Mason. I tell people all the time, if you just call your leads back, you left your competition in the dust. Like, I'm here in a small area, Morehead City, North Carolina, population 8,000 people. Our total target market's only 40,000 people. And once in a while, somebody will show up to play in my sandbox.
Uh-oh.
and I'll see a yellow bandit sign by the side of the highway. We buy houses and a phone number. Well, I don't believe in competition. I believe in collaboration. I want to call them people up and say, hey, I got money burning a hole in my pocket. I know they're a wholesaler. They're not staying in the deal. And I've never wholesaled a deal in my life. I ain't got nobody to wholesale it to. But anyway, I called them up and say, look, I got a money burning a hole in my pocket. When you get a deal on the contract, I want to pay you an assignment fee. I leave them a message. And Mason, they don't call me back.
I
Can you
know they
believe?
wouldn't.
Yes, you can believe. Like, what? Why are you spending your money on bandit signs and your labor and you're putting that stuff out, for goodness sakes? So, Mason, I got 2 questions before we wrap up. Next question. What is your magic formula that you're willing to reveal as to how you calculate your maximum offer on a piece of land?
Ooh, that's an interesting one because it varies deal to deal so much. But the easiest way that I would do it, or give advice to people that do it, that are in the space, that have enough of experience to raise private money, is you look at what your cost of capital is and you annualize it, and you look at and then from there you look at the deal, and you need to make sure that there's enough margin in the deal to make sure that if there's any standard deviation or the market drops 10 or 20%, that there's enough deal for you to make whatever desired profit that you want to make, as well as pay back your investor in whatever anticipated timeline it is to sell. So say that your cost of capital is 20% annualized, and that you expect the property to sell within 6 months. And gosh, you asked me to do math and I'm like needing to write it down or something like that. But it's essentially,
so in other words, you don't take tax value and offer 25% of tax value.
Oh, that doesn't make any sense. That's
you've got a more involved formula as to how you come up with your offer.
Oh yeah. Well, and because not everything is a deal, and you can have more thin deals of, I'd actually never wholesaled a property until this coming month. And I think I have 10 contract assignments that we're doing because the margins were more thin on it. I didn't want to deploy my capital on these deals that were more thin margins, but I made the initial contract assignable and marketable, and I had realtors and title companies willing to work with me on it. So I've got, 10 deals closing next month that will net me about, do some math here, call it 40 grand maybe on those assignment ones in particular, not my other deals that are closing.
Right.
Which my basis on that investment would have been close to like 290,000, which I typically wouldn't do a deal with that thin of margins of 290K in cash and only 40K in profit on it. So with those ones, I was able to get creative and not have that much capital in the deal besides my earnest money. But in general, yeah, I try to make anything work that it's a good quality piece of land. And if the margins are thin, do an assignment. And if the margins are potentially more hefty, or it's something that I would definitely want to purchase myself, I just do that math of cost of capital minus desired profit, and that right there gives me that number.
Okay, very good. Last question. What's your favorite method of disposition, your favorite method of selling and cashing out these pieces of land? You list it with your realtor?
That's exactly it, where I don't have to think about it, where my acquisition manager brings it to me. I can take 10 seconds and say, this looks like a good deal. I sign all the contracts. Title company sends a mobile notary to my house. My realtor's already got it listed and with good pictures up, and we get an offer 3 days later for 2 or 3 times what we paid for it, and we close in 30 days. Of those ones are great. They don't happen as often as as I would like, but man, I had a few this year that were like 60K profit, just easy, didn't have to think about anything. Those ones where my realtor does all the work, and my acquisition manager too.
Mason, don't you feel a little unworthy to make all that kind of money for the little bit of work you do?
No. I'm the one that learned in my career what it takes to be an effective business operator, and I'm the one that took the gamble and the risk and put myself and personally guaranteeing notes sometimes, which I don't do anymore, and took on the risk and created the systems and business and opportunity and raised the money. And to me, with everyone that we do business with, we always tell them for the sellers if you want the highest and best dollar, go to a realtor, we can refer you. If you want quick and convenient, come to us. And a lot of times these people, they're not desperate, they're just busy. And so we're able to give them the cash they want. We're able to make our realtor money. My acquisition manager's making money, the title companies, and I'm making money too. And I'm taking that money and putting it right back into the business or assets that I'd like to own for the rest of my life. And if you start a business and you're willing to take it on, you deserve to make money. That's America.
Amen, brother. Amen, brother. So with that, Mason, thank you so much for joining me here on the show. Connect with Mason at www.masonrmcdonald.com, and you can find him on LinkedIn as well. God bless you, Mason. Thank you so much.
Thanks, Jay.
There you have it, another amazing episode of Raising Private Money with Jay Conner. Thank you for joining me here on the show, and we look forward to seeing you right here on the next episode of Raising Private Money.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/money guide. That's jconner.com/money guide. And download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/money guide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.